COVID where you could have got a mortgage below 2%. Can you imagine a 5-year mortgage at 1.89? That's one of the ones that we did many eons ago.
Hello, and thank you for joining us today on the TF Team podcast, the news you can use. Today, we're going to talk about some of the things that have been happening this week in the news for all of our Canadian viewers here in Ontario. Pierre, what's been sort of the big news this week? I know we've been hearing a lot about the Bank of Canada and I guess the interest rates, and they've held steady at this time. Is that correct?
Exactly. So thanks, Dave. So the Bank of Canada rate stayed at 2.25%. What does that mean to the average Canadian? It means that your mortgage rate is probably going to stay as it is. It means that your loan rate is probably going to stay as it is. The good thing is that we don't foresee it increasing anytime soon. So you could rest assured, if you're thinking of buying a house, David, that maybe you don't need to postpone it for years to come. We are in a low interest rate environment, not as low as we once had it prior to COVID, where you could have got a mortgage below 2%. Can you imagine a 5-year mortgage at 1.89? That's one of the ones that we did many eons ago. Now you're looking about close to in the 4% range, right? So if you're thinking of buying a big ticket item, car or house, now's the time, with the potential for interest rates to go down later.
Okay, so we're sort of foreseeing right now things are just being held steady. There's a possibility they may go down in the future. So now, provided, of course, that we have some financial planning in place, we can start looking at those big ticket purchases. I know you did mention homes. My wife and I are actually in the market right now. We've been discussing purchasing our first home. We're very excited about that. Just trying to get all our little ducks in line, but it's very exciting. So if somebody's wondering, why does the Bank of Canada do this? Can you sort of explain why does the Bank of Canada even change those interest rates and how that does have a trickle-down effect to the mortgages and what that means for the Canadians?
Yeah, actually, very good question. So one of the main function of Bank of Canada is the money supply, right? It kind of regulates the flow of money. So either they increase the money supply, which what will happen will basically spur the economy. Because when I give you money, David, if I gave you $100 right now, what would you do it? What would you do with it?
I'm going right out to I'm spending it.
Exactly. So if they increase the money supply and Canadians have access to more money, the majority of them are going to spend. And what will happen to the economy? The economy is going to grow. The reverse is also true. If they decrease the money supply, they draw it down, there's less money in circulation, then what tends to happen is that we've got less money to spend. And as a result of that, the economy kind of slows down. So that's kind of the one aspect, the monetary. And then the second, what they also like to do, which kind of works similarly, is the raising and lowering of interest rates. So when they lower interest rates, it makes things more affordable, whereby before at 5% mortgage rate or at 5% interest, I was borderline. I'm not going to be able to buy that house. It's way above. Now that they've lowered it, and let's say now mortgage rates drop to 4.5%, now all of a sudden, it makes a difference in my day-to-day and I'm able to afford that house. So now it all depends as to the Bank of Canada. What's their strategy? What are they trying to do? Are they trying to, kind of give a jump start to the economy, or are they trying to slow it down? Or as we are right now, we're just in limbo because they don't want to, it's like you're playing a game in terms of strategy, you're playing cards. You don't want to go all in if you don't know what your opponents, what their cards are. So with all the uncertainty that we have with the T word, right? The tariff word, they don't want to just go all in and just start, doing all their strategies and lower interest rates. And all of a sudden, only to find out that we're going to have 150% tariffs on everything. And then now they've wasted all their strategies on something that's not going to come to fruition. So right now, we're just at a standstill until we figure out where the economy, where the trades are going. Once we have a better idea, they could get back to continuing what they've started a while ago, which was to decrease interest rate.
Okay, because I know this comes back to, we were discussing the inflation rate last
Mhm.
week, and I know the inflation rate was sort of at the higher end,
Mhm.
but not quite at a level where the bank has to step in.
Mhm.
So what you're saying right now is the bank doesn't see any need to intervene.
Mhm.
They're just sort of waiting on the sidelines to sort of see what happens and then implement strategy.
In one sentence, you captured it all, and it took me like 15 minutes to, to encapsulate. So
Well,
that's why we pay you the big bucks.
I'm the
right?
succinct co-host that just sums everything up for you, and I'm glad to be able to do that.
Exactly.
So I guess, again, for the average Canadian, if you are looking to purchase a home, now could be a good time to get into that market.
Mhm.
Of course, we don't know where interest rates may or may not
No.
go in the future.
No.
That's undetermined. But right now, if we locked in for, say, a 5-year, we're going to be at that rate that we have now.
Exactly.
And then in the future, I mean, nobody can really predict
No.
exactly what's going to happen, but
Yeah.
it seems to be a good time at least to get your feet wet.
You're right, and it's not like we're doing a promo for buying a house, but the government also has what is known as a stress test, so that in the future, should interest rates rise by about 1% or more, up to 2%, will you still be able to afford it? So when you do apply for a mortgage, they stress test it. So they figure that, yes, we're going to give you this low rate. Let's assume at 4%, this is the rate that you're going to have. But we want to make sure that you could afford it based on a 2% higher rate. So if you qualify for this mortgage stress test, it basically means if interest rates go up by 2%, you could still afford your house, so the banks will approve you. So right now, again, if you could meet the stress test, and you have the down payment available, yeah, now's a good time. It's almost like I say about investing. When I ask you when's the best time to invest, well, it was yesterday, right? So today is always a good time to invest. Markets go up and down, interest rates go up and down, but you could take advantage in any type of market or situation.
Okay, that's great. So again, it's obviously prudent to have a good financial plan going in. Something obviously the TF team is able to help out with as well. So if you do need any planning around that, obviously reach out.
Yeah.
So that's good news. It seems for all of us here in Ontario, the fact that at least hopefully things won't be getting more expensive right now.
Oh goodness.
If we can at least keep things,
exactly
at status quo.
I mean, like you said, last week we talked about inflation being at 2.4. It jumped up from 2.2 to 2.4%. And I think we've talked about last week, if I'm not mistaken, about the whole GST rebates that the federal government, Mark Carney government, is giving. But he's only giving those rebates, the top up, to individuals, which will impact about 12 million Canadians, but 12 million Canadians that filed their income tax. So if you didn't file an income tax last year, then you may not be eligible for that. So now's the time. So I know we're doing the tax webinar on Thursday, February 19th.
That's correct.
Not the Tuesday, February 19th, as I said in our last broadcast. So Thursday, February 19th. So those are the kind of tidbits that we will talk about at our tax webinar on Thursday, February 19th.
Excellent. Well, I think everyone should tune in for that to check that out and get some more tips. So the economy seems to be, let's say, stable right now. It seems like other things are sort of fluctuating now. It seems like people are gold is going crazy. I know a lot of people are talking about that. It hit record highs.
Yeah.
It sunk back down a little bit. It's kind of inching back up. Silver is going on a crazy roller coaster as well. Why is that happening right now?
It's gold and silver, but really gold is kind of the hedge. It used to be the reserve where most countries would have a large money of their reserves in gold, just in case the world went to hell in a handbasket. So when the world goes in a hell in a handbasket and our dollar is not worth what it was, people gravitate towards gold. So what is happening now? What is happening in the whole world? It's going to hell in a handbasket right now. We've got all these wars all over the world. And as a result of that, it creates all this uncertainty. So the only certainty that we know, it's not the fiat currency or the fiat piece of paper. It's something that's tangible, such as precious metals and gold. So that's why we saw it go to 5,000. And then, like everything, it went up really fast. And then, of course, it's going to come back down again. But if you look at the trajectory for gold and the stock market and silver over time, it's been on an upward swing. Not straight up, but it goes up and down. So again, for clients and for viewers, it's yes, the market is volatile. But if you have a plan, if you've got a good diversified portfolio, you should weather the storm and take advantage of the market's trend, which is upward.
Okay. So again, if I can just sort of sum this up in one word, the people flock into gold because of the word security.
Mm-hmm.
They see this as my money is safe here.
Mm-hmm.
I'm not sure what the rest of the markets are doing, so I'm investing here. So do we expect to see this volatility going forward with gold, considering that we have all this uncertainty right now?
Yeah. So depending on who you speak to, all the various economists or pundits, some of them, because gold has reached 5,000, they're saying 10,000. And the last one I saw, very optimistic, said 20,000.
Wow.
So I'm thinking if it's at 20,000, there's something seriously wrong that is happening in the world at this moment. But it could reach to 20, but in a very long time frame, but not anytime soon. So again, having a diversified portfolio, you have a bit here, a bit in technology, a bit in precious metals, a bit in terms of banks. You're well diversified so that if gold doesn't do as well as we thought it would, hopefully, the financial services will do better, the tech industries will do better. So as a result of that, you're kind of buffer for the ups and downs of the market.
Okay, that's excellent. So a diversified portfolio can sort of help you weather the storm, is what we're sort of taking away from this. Having a good financial plan by professionals, for example, the TF team.
Oh, you keep saying TF team, which is...
and you can check out that webinar as well on February the 19th for your tax planning. That's obviously something we do encourage all of our viewers to come check out. I think that'd be fantastic for all of our viewers here in Ontario. Is there anything else we should really cover here? Is there anything else that sort of comes up for you this week?
No, actually, I mean, the kind of main thing and what, students, clients, they always come to me as to, what's a good investment, right? What should I buy? The market, they're seeing the market is going up. Last year, the TSX went up 23%. What should I buy? Again, if someone provides you with an answer without really getting to know you and your goal, and we're not taking a holistic view of it, I wouldn't take much credence into that. You need a plan. If there's one thing, I mean, we've said it so many times in all of our conversations, is that if you don't have a plan, you're planning to fail. Right. So having a plan, which will be different for everybody. Again, it doesn't have to be with the TF team. Talk to your advisor at your bank or credit union. But if you don't have one, we're definitely here to assist you. Just sit down with a professional, making sure that this plan is the right for you, that will weather all the storms, so that when you see these things going up and down, you don't lose all your hair like we did.
Absolutely. It was too much stress.
I know.
Well, thanks again for your time today. We do encourage all of our viewers here to check out that webinar. Again, that's Thursday, February the 19th. We do thank you all for checking in and listening to the news today. Thanks for your time.
Thank you.